Alrighty. Good evening, everyone, and welcome to an evening with the Knight. My name is Gregor Evans, and I have the honour of leading a fantastic team at the Knight as the Managing Director. I'd like to welcome everybody, whether it is in person here this evening or virtually via Zoom. The Knight's annual Lot Owners Education Seminar, called An Evening with the Knight, is held every year, and we talk about pertinent owners corporation matters relevant to our clients, owners corporations, lot owners, but also committee members as well. I'd like to also respectfully acknowledge, the Boomerang people of the Kulin Nation and the traditional custodians of the land throughout Australia. We recognise their continuing connection to land, waters and culture, and pay our respects to their elders past, present and emerging. I would also like to thank our sponsors for tonight's event. I would particularly like to acknowledge Linkfire, who is our premium sponsor for this year's event. Thank you, Alistair and Chris and the team for your support, making this event possible. Thank you very much. A few small housekeeping items before we get started. For those who may not have attended a webinar virtually before, your microphones and cameras are switched off. There will be a break between the two panel discussions to stretch your legs. We're looking at about a 10-minute break if we're on target. So this evening, our topics are owners corporation and building compliance. As each topic is very different, the format of this evening is that we will have two panels. The first, I'll be facilitating discussion regarding obviously owners corporation compliance, and then the second will be touching on building compliance. There is the ability to ask questions at the end of each panel discussion, and we'll be using a platform called Slido. So you can access the Slido link via the QR code, which will be shown on the screen later on, but it's also for those in the room on your tables in front of you. Unfortunately, we may not be able to get to all questions, but certainly we will endeavour to get to many as possible. Alrighty, so without further ado, I'd like to introduce you to the first panel. On our first panel tonight, we will be discussing OC compliance with Kate Trickey, Madre Clark and Jenny Wang. Kate Trickey is one of our 4 Owners Corporation Manager team leaders at the Knight. She has over 6 years of experience in Owners Corporation and real estate management, including the management of commercial and high-rise Owners Corporations exceeding 300 lots. Madre Clark is our Senior Owners Corporation Accountant and has been with the Knight since 2015, working on buildings ranging in size and complexity. With over 20 years of experience, Madre has accumulated vast knowledge in various fields, including auditing and assurance. Madre is a CPA, a Certified Practicing Accountant, and is also registered with the Tax Practitioners Board of Australia. And Jenny Wang. Jenny is a Director of Berrigan Dubay Lawyers and heads up both the Property and Owners Corporation divisions. She has been specialising in strata law for more than 16 years and services a variety of clients, ranging from owners corporations to developers and also lot owners. So Jenny, my first question of this evening is directed to yourself. Can you please inform our audience in regards to the framework that requires an owners corporation and associated stakeholders to comply with certain obligations?
Thank you for the introduction.
No worries.
Thank you everyone for having me here this evening. There's a lot of compliance. When it comes to owners corporations, there's actually a lot of compliance involved, and compliance comes at all different levels. At the very first level, we've got the Owners Corporations Act. Now, for those of you who have been around in this field for as long as me, I still refer to it as the new Act. It's been in place since 2006, and at the evening of December the 31st, went from the Owners Corporation, or the Body Corporate Subdivision Act to the Owners Corporation Act. We were given a framework. Now, over the last, since 2016 until now, there's been various changes to the Act, but the bedrock to the Owners Corporation world is found in the legislation. And if you go one step further, there's a lot more to it than just being able to read and understand the Owners Corporations Act. We've got the Owners Corporation regulations, which give us some further information about what needs to be considered when applying the Act. Each individual owners corporation is able to also set its own rules about how it administers its own affairs, how it sets housekeeping rules or applies bylaws, some states call them. In our state, we have model rules. So model rules take the form of some set requirements which the government has put in place as the starting point for housekeeping in the world of owners corporations. Now, owners corporations themselves, buildings, are able to adapt, they're able to change, they're able to make special rules themselves, which they say is how they control and govern their own buildings. So we've got those special rules as well. They're registered on title as part of the subdivision. Any person who is a member of the public can search the titles office and also see those rules registered. Now, on top of that, the world of owners corporation actually goes one step further. So not only do you need to be a lawyer and be able to read the Act, you need to be the legislature to be able to make your own rules. You also need to wear the hat of an accountant because, as you'll no doubt hear from this evening, we need to comply as an owners corporation with some standards, some accounting standards. So you'll hear, I'm sure, about all the AASBs and all the best practice guidelines and so forth. So the legislature has also told us that as an owners corporation, we need to do proper accounting. Another hat that you have to wear sometimes is we need to also understand the Building Act, the Building Code, the building rules of Australia. As long as you're living in a building, you're also going to have to deal with the compliance, and that's something I'm very excited to hear about this evening. The final thing that we also need to know is when you're working in an organisation, and owners corporations are no exception, we've got overarching things to also take into consideration. We've got the OH&S, we've got employment, we've got how do we deal with people who are disgruntled in a very small space, all thinking that this is my kingdom and this is my castle. So there's a lot of other things at play when it comes to regulation and compliance, and I'm very excited to be able to go through with you some of these things. Hopefully the list I've given you doesn't make you think, oh no, but that is the life of an owners corporation manager, and we're very pleased today to be here with the Knight to share with you some wisdom that they've learnt over the years in managing buildings.
Thank you, Jenny. Now, you mentioned there's many aspects in terms of compliance that the owners corporation must abide by. Kate, question to yourself. There are many areas. Jenny mentioned accounting, so financial management, but there's also insurance, dispute resolution as mentioned already. There's owners corporation fees, owners corporation rules as touched on, decision making, taking further action, whether it's at VCAT or another courts such as the Magistrates Court. Are you able to touch on some of the more important areas where an owners corporation needs to comply, please?
Absolutely. Thanks, Gregor. I think the most apparent and probably constant area where an owners corporation must remain compliant is repairs and maintenance. So the owners corporation legislation states that an OC must repair and maintain the common property, including the fixtures and fittings in regards to the services and enjoyment of the common property. So of course a process must be followed where an owners corporation may have, say for an example, a relatively simple one, an intercom not working. A process would be followed to get a report on why that's not working, obtain quotes. The committee would by ordinary resolution decide to appoint a contractor to fix it. But ultimately the owners corporation must repair and maintain the common property. It must reinstate, in that example, that intercom to be working as it is required. So that's probably, I think, the most constant compliance that the owners corporation must adhere to. Another item is, of course, insurance. The owners corporation must take out reinstatement and replacement insurance of all buildings located on the common property. And then further to that, there are tiers of owners corporations, tier 1 to 4, that being any owners corporations with over 3 occupiable lots must obtain an insurance valuation every 5 years. So arguably if they don't have a valuation obtained within a 5-year period, they're not compliant sort of on that item of the legislation. A couple of other areas, I suppose touching back to maintenance again, maintenance plans, similarly to the insurance valuations for tiers 1 to 4, tiers 1 to 2 owners corporations, which are owners corporations with more than 51 occupiable lots, must obtain and approve a maintenance plan. So then once that's approved, the owner's corporation then must strike fees and carry out maintenance in accordance with that plan. So any owner's corporation with more than 51 lots that arguably doesn't have a maintenance plan would not be compliant with that section. A few other items would be around meetings. So an owner's corporation must hold an annual general meeting, or an AGM. The legislation states that it must be held within 15 months of the previous meeting. The Knight does suggest that an owner's corporation would hold its meeting within 3 months after the end of financial year, but the legislation does state within 15 months. So yeah, meetings is an area that there's sort of quite a number of items of compliance as to what must be tabled at the meeting or addressed or resolved. One that comes to mind is committees. So any owner's corporation that has over 10 lots must appoint a committee. I don't think you'll find an owner's corporation manager who hasn't been involved in a building where they can't muster the 3 volunteers to become a member of the committee. So for those of you here who are committee members, which you all are, please remain on your committees if you can. If you don't have 3 members to create a committee, arguably the owner's corporation is not compliant. So that's an area to focus on at meetings. Meetings kind of rolls into minutes and agendas. So the owner's corporation must distribute an agenda for a meeting and it must create and distribute minutes for that meeting also. So that minutes will include all the resolutions that are made at that meeting, be special, unanimous or ordinary resolutions. And then kind of from that, minutes rolls into records and owner's corporation register. So the owner's corporation register and the owner's corporation records are arguably 2 separate things in sort of the legislation. The owner's corporation register needs to hold a number of documents and a bunch of information, some being lot owners' names and addresses, insurance policies of course, any building notices or notices VCAT of the like served on the owner's corporation. The lot liability and entitlement information of the owner's corporation must be held there, and the register must be provided to an authorised person who requests it by the owner's corporation. So that an authorised person being an owner, a legal representative of an owner or an agent of an owner. Similarly, the owner's corporation must keep records. Slightly different to the register, a little bit more, I suppose, expansive. Correspondence forms part of the records, reports obtained, and that's kind of where those minutes from your meetings come in. So AGM minutes, committee meeting minutes, all form records of the owner's corporation. And again, the owner's corporation must provide the records to an authorised person who requests them. So the owner's corporation is responsible for keeping those records. There is a couple of specifics in that item that I think proxy forms must be held 12 months after their expiry, and then ballots must be held 12 months from the close of the ballot. So there is a couple of specifics in regards to holding records for a period of time, but generally speaking, records of the owner's corporation must be held and provided to an authorised representative who requests them. So yeah, that's just a couple of the, suppose, ones that come into play on a really regular basis for owners' corporations, but there's many, many more.
Fantastic. Certainly a long list of compliance obligations there, and there's many more if you go through the Owners Corporations Act with a fine-tooth comb. But thank you for that, Kate. Before I throw it to you, Madre, I'm going to touch on Owners Corporation fees, and I might ask you this question, Jenny. In terms of how an Owners Corporation can actually apply fees to each lot owner. There's a plan of subdivision which has a schedule of units of liability. Are you able to just touch on that and talk about how an owner's corporation must recover fees on that basis, please?
Absolutely. So there's a few ways that an owner's corporation can levy fees. So in section 23 of the Owners Corporations Act, it outlines the basis upon which an owner's corporation can levy fees. So the most ordinary way is by ordinary levies, and they are for the administration and maintenance of common property. So you'll see that there's admin fees. There's also, that's usually done on lot liability. Okay, so you'll see, as was mentioned by Gregor, in the plan of subdivision, there is a schedule that's disclosed for everyone to see. And that's almost like the golden formula, the proportions that one needs to bear in mind that your particular lot does play with regards to the entire building. So for example, you might see that there is actually 2 columns in that schedule. There's what's called the lot entitlements and the lot liabilities. So the brother of the lot entitlements is lot liabilities. Where lot entitlements gives you the power to make votes, lot liabilities show you how you are to share the fees compared to everybody else. 2 points I'll make about this. Now, the first point is lot liability is usually, but not always, the same as lot liability. Okay, most times it is, but it's not always the case. And if we went through and we had levies issued on the basis of lot liability, you will see that every year it is done proportionately. Okay, so say for example, how does that calculation work? If you had 5 lots in a subdivision and they had 10 units of liability each, that's 1/5 that you would be paying, 10 out of 50. So everybody who receives owners corporation fees, whether they be for admin or maintenance, they'd be sharing to that proportion. Now, another way that those fees could be levied is not based on lot liability. It could be based on another way, and there's a few ways in the Owners Corporation Act which one can apply, but the most commonly referred to one is the substantial benefit rule. Okay, and on that basis, we dispense with lot liability and we apply it to the lot who benefits more, pays more. It's a very hard to deal with equation. It involves some degree of some subjective decision making. It's not a clear science. I can't tell you what that formula is going to be, like I could with lot liability. And so for that reason, it is quite common for an owners corporation manager to come to me as a lawyer and say, I need you to look at the circumstances and I need you to tell me whether you think the substantial benefit rule applies, and if so, what the outcome might be. So I'd love to give you a golden formula. Unfortunately, there is none. But there are also some other ways as well. So for example, ordinary fees under Section 23, it can also be done slightly differently. So in December 2021, there was a change in legislation which muddied up all the waters. Everything was very clear beforehand. Now we've got a few other ways of dealing with it. But when we go through and deal with debt recovery, one of the things that I would be checking is the power and authority to charge particular fees, and then coming to how they were levied, whether we've got the right resolutions to support it, whether it be at AGM or SGM level, and then look at the basis upon which the fees were levied and then apply it into individual lots.
Fantastic. And further to that point, looking at how owners corporation fees have been levied, there is a process that must be followed, which the Owners Corporations Act dictates to us. Are you able to touch on some of the key requirements of that, please, Jenny?
So we need to comply with Sections 31 and 32 of the Owners Corporations Act. Section 31 requires a compliant fee notice, and Section 32 requires a compliant final fee notice. Now, CAV, Consumer Affairs Victoria, has given us some guidelines for what that might look like, and they're very, very prescriptive. So they go down to the detail of how you need to prescribe your line items, including, for example, you need to be charging interest and need to disclose the daily rate at which the interest applies. So there are some very strict rules. And so once you have complied, you then need to comply not just with the notice requirements, but there's a few other requirements. So we need to also comply with the timing requirements. So the timing of when levies goes out is really important. We need to give people notice that the fees are in fact due. They need to go to the right address in the right form, which is prescribed, and thereafter we need to make sure that we give 28 days notice after the first fee notice, and then 28 days after the compliant final fee notice is served. There is no requirement for a reminder. There is no requirement for a telephone call or anything like that. All that is required under the Act, Section 31 and 32, is 2 compliant notices, fee and final notice.
Fantastic. Thank you very much. Now moving on to financial management. So as mentioned, we have Madre, who has been a senior owners corporation accountant at the Knight for many years now, and is one of the best in the industry, I must say. So Madre, welcome. And I'm very keen to get your insight when it comes to compliance obligations for financial management. So when it comes to the preparation of financial statements as well as the reporting of financial statements, are you able to touch on some of the requirements, please?
Yeah, absolutely. Firstly, I almost want to say that accounts, it can be very simple but not straightforward. How it's prescribed in the Owners Corporation Act, it seems very like surface level, it seems very, very straightforward, but it's actually not. So looking at it, it basically says what needs to be provided and how it needs to be prepared. And it's not very prescriptive. It says that you need to prepare proper accounting records that has to reflect the income and the expense, the assets and the liabilities, and it must have a fair view of fair and reasonable view of what it should look like. However, then it specifies that it needs to be prepared in accordance with the Australian Accounting Standard Board, and that's where the tricky side comes in. And that will specify that it needs to adhere to the specific, either the accounting standards, or you can opt to have, instead of general purpose accounts, you can have special purpose accounts, which is the most reasonable option for an owner's corporation. When you think of general purpose accounts, you are looking at the BHP Billiton's, Siemens, it's the big guys. If you look at owner's corporations, the report, like it's not a reporting entity. We're not on ASICs. It's more for the everyday person to understand what is going on. This is the income, this is the expenses, and this is the maintenance plan. So there it specifies, and there we encourage it. Actually, it specifies that it has to be in accordance with the Australian accounting standards, and it has to be prepared in accordance with either the general purpose reporting or the special purpose reporting, whereas an owner's corporation, for all purposes, is a special purpose entity. It also specifies that for Tier 1 to Tier 3, it has to be presented at the annual general meeting, which will then be, as said, within 3 months after the financial year end. And it has to then be, like, in our terms, and in the like complying with the Australian accounting standards, you will be presented with a balance sheet and a revenue and expense. A lot of people call it a profit or loss. That is more general purpose accounts. An owner's corporation is considered in all intents and purposes, it's a not-for-profit. We are not here to make a 5% markup. We're not selling anything. We want to break even. The income that we receive, we are expecting that is what we will be expending, and that if there should be a little surplus at the end, it's not a profit, it's a little surplus that the entity has for a rainy day.
Fantastic. You mentioned that an owner's corporation is treated as a not-for-profit. However, the ATO, so the Australian Tax Office, deems an owner's corporation to be a public company when it comes to tax.
Correct.
So I'm keen to understand when is an owner's corporation required to pay tax to the ATO? Yes. Obviously, it comes down to assessable income. So if you can talk to us about that, that'd be terrific.
Absolutely. It's interesting that you do say that, because for tax purposes, an OC or owner's corporation is considered a company. However, for GST purposes, it is considered a not-for-profit. So we're always kind of like thrown from one side to another side, and we have to navigate what are we considered as in which field. So to touch on the income tax return, it is any owner's corporation that receives assessable income. And to be assessable income, it has to be non-mutual. And to touch now on what is non-mutual, like when you look at an owner's corporation, it's all mutual. Like everyone is mutual. It's everyone's together. So it's mutual income, which is, say, the revenue received from levies. That is mutual income. It comes from within. It comes from the owner's corporation. The non-mutual income, the way that I always say, it is coming from outside of the owner's corporation. That is, if you've got a billboard that you rent out or lease out, if you have a term deposit where Macquarie pays you your interest, that is non-mutual income, and that is the income that you will be that you will be taxed on, that will form part of your assessable income. And saying that, so just to give, so for instance, leasing to an external party, you will be taxed on that. That will be part of the assessable income, which is the non-mutual income. A laundromat within an owner's corporation, if you've got a little venue, a little room that you hire out, that will most likely come from external, the income. And that will be assessable income. If you have to do a deficit levy and it's from within, that will not be income. The way that I also try and explain it when we do presentation, when we do presentations at the office is, think of it as you're sharing, you're in a share house. You've got 5 housemates. You've got money that you put towards in because you're going to have an AFL party at the house. Everyone puts in $100. That $100, that's not part of your assessable income. If you go and you spend, you buy all the snags and whatever you need to buy, and there's $100 left, that's not going to be a profit, or you don't have to declare that. That is your piggy bank money. You don't get taxed on your own piggy bank.
Fantastic. And the ATO doesn't stop there in terms of tax requirements and compliance. At times, an owner's corporation must be registered for GST.
Yes.
Can you touch on when that must be the case?
Very good. Thank you. Thanks for bringing that. I wanted to actually mention that. The GST, that's also one side or the other side. For all other purposes, and I know that a lot of owners corporation managers, as a sign of prudence, when a property is registered, like when it comes into existence for a new build, they will automatically say that it is run as a business. So there, the threshold is $75,000. But 99% of the time, an owner's corporation will be considered as a not-for-profit. And there, the threshold is $150,000 of GST turnover. So if you expect your GST turnover to be $150,000 or more, or you expect that it will be within the next 12 months, that it will be over the threshold of $150,000, you have to register it. I normally say immediately, but you have 21 days to, as soon as you become aware that it's going to touch the threshold, rather be safe than sorry than having the ATO knock on your door. You have to register it for GST.
I might just park you there, but one more question in terms of, I guess, financial compliance. So there's recent changes to the Owners Corporations legislation in relation to audits and reviews of the financial statements.
Correct.
Are you able to touch on what is the difference between an audit and a review? So for Owners Corporation Tier 1's properties, so any Owners Corporation with more than 100 occupiable lots, they must undertake an audit. And for a Tier 2, so an Owners Corporation between 51 occupiable and 100 occupiable lots, they must undertake a review. So just touching on the difference between those two, please, Marjorie.
All right. And an audit and a review are basically done by the same, I would say person, but the same firm. It's a person or a business that belongs to a professional accounting body, because belonging to that accounting body, you are governed by a code of ethics, and you adhere to the standards that is laid out by that professional body of how you execute an audit and a review. So those are the people who can do it. An independent, and they have to be independent, but I can almost say with certainty, having been part of a professional body, it is part of the code of ethics, and you do not want to jeopardize your membership to that by not being what is required or what they stipulate out in the code. To step away from that, the audit and the review. So let's start with the audit. The audit gives you a high level of assurance that the financial reports presented is true and reasonably accurate, and there's no misstatement. There's no material misstatement in there. So thinking of that, like if there's like a 3 cents rounding difference or 10 cents that was transposed, that is still a true reflection of the actual financial situation of the owners corporation. So it gives you a high level of assurance. It is actually a bit more costly because of the high level of assurance. The examination of the records is more detailed by the auditing team. You normally have an audit principal who does it, and he has, and it's like a whole team of people that works on it. Source documents are traced, and it's normally the scope of work is much greater and in much greater detail. And an auditing firm has to adhere to auditing standards. So even they are governed by the Auditing Standards Board of Australia. So they have to do that. Whereas a review has got more limited assurance. That is, the scope of work isn't as detailed as what an audit will be. And also the cost is not as much as the audit would be, because there's not much work that is involved. It's not that detail that goes into it. The way that I explain it to my colleagues is, think of you as a girl, you just bought a new dress, you go to your husband, does this dress make me look fat? He
I'm not quite sure what I said.
Yes. The husband is hopefully not independent, and he will say, you look fabulous, but you're not going to trust him with that. You want someone independent. So you go to your teenage daughter. How do I look? She will be fairly honest. Yeah, you look all right. She will look you from the side. Yep, like pull it back there, maybe change the earrings. However, if you had to go, say, to your doctor and say, am I fat? Do I look fat? They will whip out and they will put you on all the tests. They will measure your BMI. So that's like your teenage daughter is the review. Your the doctor will be the audit. It will be more detailed. They will be weighing you. They will be measuring you. Whereas the review will just be.
Well, I certainly haven't heard that analogy before, Marjorie. So yeah, interesting. Maybe we can find another one, but it certainly makes the point. Thank you very much for your learned advice regarding financial compliance. Certainly a lot to take in there, but safe to say there's a lot, and we need to get it right, because
yes.
There's obviously repercussions if we don't. So thank you. Moving on, and just a reminder, we do have the Slido platform as well. So it's not on the screen up there, but it's on your tables. There's a QR code, I believe. So feel free to use your phones to take a photo of the QR code, which will bring up a link, and you can ask a question virtually, which we can see on our screen here. So there's only a few. So Jenny, there are a number of owners corporation stakeholders. Are you able to touch on some of the compliance obligations regarding potentially the committee of management, lot owners, and also the owners corporation manager as well?
Yeah, absolutely. Well, there's different requirements placed on each level of stakeholding, if I could put it that way. So one of the things that the Owners Corporations Act does is it puts the decision-making power and responsibility onto lot owners. Lot owners are the ones who are supposed to be making decisions on behalf of owners corporations, not the manager. Okay? So why is there this situation where certain things happen? What the manager's role is to educate owners, to allow them to understand where a problem arises and do administrative work to enable them to, for example, facilitate repairs or to facilitate a particular job. It's not the role of the owners corporation manager to be making decisions on behalf of owners corporations. Owners corporations can make decisions as a whole at an annual general meeting. owners corporations can delegate their powers to various representatives. So for example, the committee. You can delegate certain decision-making powers at an AGM to the committee, and you can specify at the annual general meeting what type of powers have been delegated. Certain types of powers can also be delegated to the manager. So for example, writing of checks, doing things like that, administrative duties. Owners corporations, committee people are immune from litigation and pursuing for decisions that are made so long as they act in good faith and with due diligence. Owners corporation managers also have a very stringent set of responsibilities. There's an entire section in the Act talking about what committees can do in their power as committees and when the immunity applies. There is also a section in the Act talking about what are the basic functions and duties and obligations that an owners corporation manager must have and must perform when they're putting forward their duties.
Fantastic. In terms of compliance, you spoke about the ability for committee members to be immune if they do operate in good faith. If committee members didn't do so, they went rogue potentially, didn't follow the obligations, what are some of the repercussions that they may face?
Well, for example, the immunity will disappear. That's the very first one, and they will no longer be covered by that immunity. There could be questions about whether they were acting in good faith. There could also be questions about whether or not the decisions were made for an improper purpose. So these types of questions may be called. And don't forget that the owners corporation, whether it's exercised by the owners corporation at large at a general meeting or by special arrangement, whether that be through delegations or through a committee, you still have to comply with the basic functions. Section 4 outlines the functions of the owners corporation and talks about what an owners corporation needs to do. Okay, there are rules in place set out by the Act, for example, in relation to procurement. If you're going to be procuring certain products or services, there are certain things which needs to be complied with, and whether that's at large in a general meeting or whether it's at committee level or even manager at a delegated powers level, all of those rules still need to be complied with.
Right, thank you. Kate, in terms of educating owners corporation clients, the role of the owners corporation manager is very important. We, as Jenny mentioned before, we're not the ones making the decisions, but we do have a role to play in terms of education. Obviously tonight is an example of that. Can you touch on how the Knight goes about supporting our clients with understanding owners corporation compliance in general?
Yeah, absolutely. Obviously, tonight being a prime example, but further to that, we do offer, webinars, email training sessions. We have blog posts. The Knight is committed to educating clients and ensuring that they're informed. Sort of as has been touched on several times, the owners corporation manager is not empowered to make decisions. The lot owners are required to make the decisions. So we definitely have, multiple things that go out to clients and multiple sessions run where we try to educate on long-standing legislation changes that happened in 2021, as sort of Jenny touched on, and anything that comes into sort of our sphere that we feel is best to pass on to our clients. Further to that, we have a few items, within our documents that we send out to owners for our AGM notices. There's extensive explanatory notes, so they include references to specific items in the Act for resolutions that will be talked at your AGMs or decided upon at your AGMs, that gives potentially new owners or even existing owners who you don't do it that often. An AGM comes around once a year, so it's not something that you do all the time. We try and include information in the documentation that we supply to our clients, which informs them and enables those lot owners to be empowered to make those decisions and ensure compliance. Further to that, we definitely endeavour to offer our owners corporation managers and assistants adequate training, both in-house and external. We have a lot of external training come into office or online and provide our OCMs with as much information as possible on specific items. We have our managers attend SCA training as much as possible. And further to that, we also at the Knight strive to ensure that our clients are advised that we are not always the appropriate person to provide formal advice on an item. As owners corporation managers, we act in an administrative capacity, we inform our clients, we guide in regards to legislation, but far more often than maybe owners would like, Jenny or someone of the like would be the best person to answer a question or provide formal advice, and that extends to consultants in every aspect of a building. Fire techs, engineers, builders, it's as simple as it's obvious that a plumber or an electrician should be the right person to give you advice on a specific issue, but sometimes with an owners corporation issue, owners corporation managers, our position is just to inform you on where to go to get the right information. We definitely empower our staff to make sure that if they're not sure of a response, they can come to a team leader, another member of staff, or our OC accountants like Marjorie, or also contact one of the consultants that we use to ensure that they're provided with accurate, up-to-date and informed advice.
Terrific. Thank you, Kate. Now I'm going to read out a few questions from the audience. So thank you everybody for using the interactive Slido feature this evening. There are a few questions there. A couple relate to building compliance, which we may touch on in a moment on the second panel.
I think we can have a go at them.
Go for it. So in terms of that second one, maybe, Jenny? A question from the audience. I'm experiencing water ingress into my property from neighbouring gardens through the common wall. Can we legally prevent a garden bed built against the wall? Maybe I'll have a quick crack and then feel free to fix it up for me if I don't get it right.
Go for it.
It obviously depends on the location of where the garden bed is going to be built. But if it's a private area, whether it's changing the appearance of the property, that may be an issue. If you can't prevent it, then certainly you need to ensure that under Section 16 of the Water Act, that you're not unreasonably allowing a flow of water to someone else's land. So feel free to take over from here if you like.
Absolutely. So look, I think the fundamental point here is you can control what happens on common property as an owners corporation, not private property. So the function and purpose of an owners corporation is to manage and maintain common property. This is not really an owners corporation question if the water hasn't come from common property at all. That's the very first point. So it sounds like to me that this problem which Paula is experiencing is actually a problem between two private lot owners. So ordinarily, the owners corporation wouldn't have to be concerned. If there is a common property wall, there might be a passing through of water. But Gregor, you're absolutely right. There is an entire act dedicated to just this topic, and that's called the Water Act. It controls the flow of water, and it also provides that where there is unreasonable flow from one property to another, there are consequences. So whilst you might not be able to prevent someone from building a garden bed, you could be able to charge them the costs of the damages which has resulted from their decision to do so. So I think it's a tricky one, not necessarily a fight that the owners corporation even needs to get involved in. So that's why you come to me. I might turn around and say, look, we're just going to leave this one, put this one to bed.
Thank you,
Yes.
Jenny. A question down the bottom. Marjorie, feel free to try and answer this one. So for an owners corporation that has a long-term maintenance plan and is accruing funds, it seems counterproductive to be paying tax on term deposits. Are there any alternative methods of accruing funds?
I'm not really sure. What does it mean to be accruing funds?
Well, I think the
Accumulating
question
funds?
there is that obviously funds are being put aside for a rainy day for long-term maintenance, and therefore, whilst you're not paying tax on those funds, if those funds are being invested into a term deposit, you're paying tax on only the interest component of the funds. So I don't think there's any way around it. If you're earning interest on the investment of funds,
Absolutely.
that's
Even on
assessable
your
income.
even on your normal bank account, if you earn $1, like $1 interest, you will have to pay. It's part of your assessable. Like if you earn assessable income of $1, you have to prepare an income tax.
I think the question that's
Return,
being asked here is why aren't we spending money from that particular pool where if it's just sitting in the pool accruing interest, you're going to have to pay tax on it. And the reason from that perspective is because if it's a maintenance plan, you can't just pay money out of the maintenance plan. So maintenance plan funds have been put in there for a designated purpose. It's so when that piece of equipment dies at the end of its useful life in 10 years' time, you've got money to put together a new piece of machinery. So for that reason, you could have it in a non-interest bearing account and not earn the interest, then you don't have to pay the tax on it. But
I think it's really important to understand that
yes.
if you are looking to invest your monies, that you need to weigh up whether it's viable, because typically owners corporation managers aren't going to be issuing the annual tax return for NICs, and therefore there may be a cost, whether they can do it in-house or whether they must engage a formal external accountant, and there's going to be a cost. So you need to weigh up what obviously the income is versus the cost of doing that return.
Absolutely, but I think the fundamental point that is the walk away from this question is you can't take money. So the maintenance plan, there's no discretion. Whether you choose to manage your affairs in such a way which creates income, that's up to you. You can decide that. That's an owners corporation's individual decision. But you cannot choose to spend money out of the maintenance fund just because you've got funds sitting there ready to go. Now, do you want to try and tackle a few more questions, or do you think?
I think there's probably time for only one more. We do have a short break in a moment, so feel free, Jenny, to take one.
I'm going to be super quick and I'm going to answer both of them. So Chris asked a question in here, can an OC nominate to complete minor maintenance tasks, for example, change light globes in common area rather than getting a trade to do so? Perhaps. The problem that we've got here is OH&S. If you do have a person who comes in here, hurts themselves or is inadequate to do that particular job, an owners corporation is going to find itself in liability. And so for that reason, it's commonly not worth it to get into these types of things. So changing a light globe could easily turn into repairing a light globe. So for those reasons, it's the OH&S requirements that we're mainly concerned about. Anybody who falls, trips, hurts themselves on common property is going to be directly affecting the owners corporation's insurance, which means if they slip and become quadriplegic, then the owners corporation is going to have to pay for the damages associated with that, and also answer the question on why it wasn't a trade who was doing this with the proper equipment and the proper clothing. Now, the first question that we had before, related to building compliance, but I think I can probably answer this one for you. If the builder does not fulfil the contract, should we escalate to the body corporate or to council? I'm paraphrasing, I hope that BC means body corporate. The answer is neither. If there is an issue in relation to private property, so if within your lot there is a building dispute, you should be suing the person who you bought the property from. So whether that's the developer or another party, that's a private issue. It's got nothing to do with the owners corporation. If it's got to do with common property, then the owners corporation can look into it and then decide whether it wants to pursue the builder or not. There's no building contract between the lot owner or the owners corporation with the builder, so we need to actually work out a legal mechanism for pursuing that. Now, having said that, the council probably not going to go anywhere unless we've got a stop work order and something really, really serious is going on. So this is definitely something you need to get legal advice on. I charge thousands of dollars to work this out because it's not willy-nilly. You need to actually sit down and look at exactly what's wrong and what are the options. You could be suing a variety of different types of people. You could be suing the builder. You could be suing the surveyor. You could be suing the architect for poor designs. You could be suing trades for non-compliance with Australian building codes. There are so many different people, but it's unlikely going to be the body corporate or the owners corporation in this particular case.
Fantastic. Well, that's all we have time for this first panel. Thank you very much, Jenny, Kate, Madre, for your detailed responses, your learned advice, insightful comments. Hopefully the audience took on some I guess, interesting points there and learned something here tonight. So thank you very much. We'll be recommencing in about 5 minutes. So 7:55, we'll be returning to the stage for our second panel, talking about building compliance. So for all those at home, stand up, stretch your legs, and for all those here in the room this evening, do the same if you wish. Toilets are outside and to the right, and we'll see you in
some structural.
Welcome back, everybody, to
Consultancy.
an evening with the night. So I'm now going to introduce you to our second panel, where we'll be discussing the topic of building compliance. So this evening, I'm joined with me by Kingsley Osmond, Hamish Simmons, and also Joseph Jenko. And let me introduce each of our panellists even further. So Kingsley Osmond is the Director of Marby Services and has extensive experience in the strata and property management industries. He is an expert in insurance valuations, or his company is as well, insurance valuations, maintenance plan preparation, condition assessments, and all things asbestos and general safety specific to the strata industry. Joseph is the Director of GGA Consultancy. He has over 30 years of experience in the building and property industry, holding position with state, local government, and the Australian Building Codes Board. Part of that includes a decade of experience working for the City of Melbourne as the Municipal Building Surveyor. And Hamish is the Managing Director of Summit Facilities Group. He has substantial knowledge across many facets of the facility management industry and managed mixed use and residential high-rise, commercial and industrial buildings, including Melbourne and Olympic Park Sporting Precinct, the rectangular stadium. Is that what it's referred to?
All of it.
All of it.
That's just
okay, that's only part of it. Fantastic.
Yep.
Very good. Alrighty. So Joseph, I'm going to start with you tonight, and keen for you to talk to us about what an occupancy permit is. So for people to live in a building, one is required, and we just want to understand a bit more about that type of thing, please.
Okay. The occupancy permit per se is really a major communication piece between the building surveyor and also and the owners and the future owners of the property. It is legislated for as part of a process that I'll talk about, the building permit process later on. The key piece of information, and I think what a lot of people get confused with, and I'm pretty sure is used often as a sort of a shield whenever there's some legal situations, is that the key statement is that the building is suitable for occupation. Okay, that is the key statement. So at the end of the day, of all these bits and pieces, it comes in and says it's suitable for occupation. And that's necessary as a trigger within the legislation to say, well, it's been completed. However, the point is that it doesn't actually state that it's fully compliant, right? In order to get to the occupancy permit, and on the occupancy permit, the modern occupancy permit, the current one, because there's been changes in legislations and there's been reiterations. So the current occupancy permit will have some key information like the performance solutions that were created in the building, any decisions that were made by an authority, any dispensations that have been granted by an authority. For example, there might be dispensations, for example, of building on a flood-prone zone and conditions that have been put in place for that. There might be other things like, for example, a Building Appeals Board determination where regulations have been changed. And of course, the key thing and a requirement of the occupancy permit since 1994 or 93 Building Act and 94 building regulations has been that the requirement of the listing and the maintenance regime as essential safety measures. And they used to be called essential services before we went national. All right. So that's the key point of what the occupancy permit is. It's just basically that trigger to say, yes, this is the end of the project to a certain extent. Mm-hmm. From a regulatory perspective, the mandatory inspections that were required to have been completed have been completed, and that there are no directions by the relevant building surveyor. And I'll highlight the relevant building surveyor because that's not the council. It could be the council, but in many cases nowadays, it's private building surveying firms.
Sure. Thank you, Joseph. You touched on essential safety measures, and they are obviously very important, and they cover a broad range of building services and measures. So are you, maybe Kingsley, you're in the field of inspecting, well, not inspecting, but auditing the inspection and testing of essential safety measures. Maybe just touching on a few examples if you can.
Yep. All right. Thanks, Gregor. So these ESM, or the essential safety measures, are the fire, life and health items installed or constructed in the building to ensure that adequate levels of fire and safety protection are maintained. So during that process, when the occupancy permit's created, the building surveyor will stipulate what ESM are installed in site, to what standard they need to be tested and maintained to, and what frequency. So typically these items are going to be active fire systems like your sprinkler system, fire pumps, your fire panel detection system, extinguishers, hose reel, etc. But also just equally importantly is your passive items, which could be fire compartmentation, fire doors, penetrations, things like that. A lot of those type of things people aren't aware of. So
Fantastic. So obviously there's the ESMs that need to be inspected and tested, and there's a requirement for a AESMR, which is an annual essential safety measures report, to be prepared.
Yep.
The reason for that, and what does it entail?
Okay, so the reason for that is the building regulations require it. So Part 15 of the building regulations require an owner or an agent of an owner to prepare an annual essential safety measures report, which is essentially an audit of the people, audit of the people servicing the equipment, checking that all the items on the occupancy permit are being tested and maintained to the prescribed requirements. Ensuring that there's no critical defects or any defects with those testing records, and making sure that the building's functioning as per the design of the initial fire engineers and the building surveyors certification.
Terrific. And in terms of doing that audit, if you identify a non-compliant item, what is the process there? And I guess what are the ramifications, whether yourself, Kingsley, or Joseph, for non-compliance?
Well, from our end, we're engaged on the annual audit side of things. You've got like our sponsor in the room, like Link Fire, a company that do the actual testing and servicing of the equipment. From our end, we're looking at, are all the items being maintained as per the occupancy permit? So that's your first level of, are you compliant in that respect? So quite often, a lot of properties go out and they get a company to quote to maintain the building. They might not ever receive the occupancy permit. So, and then they just quote them based on what's there. Later on, there might be, like, well, here's the occupancy permit, and we discover that there's X, Y, and Z items have never been maintained, or they're not being maintained. Another part of the annual audit's not just checking that everything's being maintained, but also looking at those service records. So contacting those companies and being like, are there any critical defects or issues with the site that haven't been repaired? Because, as touched on in the previous discussions, it's the lot owners that need to make the decisions, and quite often, non-conformances can be raised for a long period of time before any action's taken. So the annual report's a good way of kind of, pushing that one along and getting things done.
Fantastic. And Joseph, I guess, who's responsible? Who is the party, the body that can clamp down and take action against the owners' corporation if they've identified there's non-compliance?
Okay, first of all, there's two bodies that actually can be involved in this. The first and foremost is the fire brigade. Okay. They can rock up and they can then undertake, and they've been given authority to actually undertake inspections and audits of the essential safety measures and whether they're being maintained in the building. They can take their own enforcement action as well, right? But and issue fines with regards to that. Of course, then it's a sort of a dual role with council as well, because council will also can rock up, ask for logbooks, ask for the annual essential safety measures report, and require to verify that maintenance has been maintained on the property. And of course, the ones that can take action is a little bit split between Fire Rescue Victoria and also the council, and I'll put my former hat on as the MBS. It's not unusual that we'll get notifications from the brigade, and what we set up in place from in council was the fire brigade doesn't have the records of who the OC or who the owners of the property are, so the council is. So they send their report to us, and then we automatically would have sent it across to the OC for them to follow through with. On a separate basis, you can also get, and I'll talk about this as part of the enforcement process as well, when there's non-compliance where the fire brigade believe that there's pure non-compliance, right, or something's been altered or changed or whatever, they might actually refer it to council and saying, we would like you to investigate this and take the appropriate action. And that's when council will step in. What you'll find more and more as part of council's responsibilities, not only in the City of Melbourne but throughout Victoria, is that councils are actually undertaking audits as well. And they will normally provide at least 24 hours notice to say we'd like to attend the property. And usually there's a bit of a negotiation about, when is an appropriate time to get out there. And there's a mandatory requirement that the records need to be available. The occupancy permit as well needs to be displayed, sure, or in a position where it can be obtainable, or for example, it might be with the facility manager or the building manager. It might be nominated in their room. One of the things that I'd probably highlight is if the occupancy permit and the attached schedule of essential safety measures is incorrect, it's imperative that you actually get it corrected. Right, because a lot of the maintenance companies, when they get out there, they're going, hang on, where's this? And how can we sign off an annual essential safety measure report on this item when it's not even there?
Sure.
Okay, so that's not uncommon, and we get that quite often. And the first step that you do is from the relevant building surveyor, you report that to them, and you ask, and they might charge a fee for that rectification, but it has to go back to them because they are the issuing authority. There is a Section 72 of the Building Act which allows the council to actually modify it, but very rarely will you get councils stepping in because the legal ramification of doing that. Because once they enter the building, they then need to be charged with assessing the whole building.
Sure.
Okay, so that's the enforcement part with ESMs.
Sure. And is there fines, potential fines from council as well as the Fire Rescue Victoria?
Yep.
And is that something that they go to straight away, or is there more of a leniency there? If an owners corporation can demonstrate that majority is being done, how lenient are councils in that regard?
It's going to very much depend on the council.
Yep.
Fire Rescue Victoria will normally issue penalties, right, in terms of infringements. It'll be an infringement notice, which is a bit of a lower order level of fines. Whereas if the enforcement action taken by council is, and it might be the case that the FRV refer the maintenance to the council if they're not getting any traction. In that particular case, you're almost setting upon a case of a notice, building order, show cause why. If you don't do it, then it's then taking you to court. Now, for a corporation, the maximum penalty is can be up to 480,000.
Okay.
Right? That's at the extreme.
Sure.
That's at the extreme, and that's not at the discretion of the council. It's at the discretion of the magistrates.
Okay.
Okay? So normally what you'll find, a lot of councils would prefer to get the issues resolved, because in reality it's not about revenue generation, it's about getting the problems resolved.
Sure.
But you know, you will find some councils that will see it that, you know, them expending resources, they need to recoup some money somehow.
Okay.
All right, and that's why there is such a variation out there in how the municipal building surveyors tackle the problem.
Okay. Thank you, Joseph. Moving on now to occupational health and safety. So under the Occupational Health and Safety Act 2004 here in Victoria, it specifies that a person who, as to any extent, the management or control of a workplace must ensure that the workplace and the means of entering and leaving it are safe and without risks to health. Now, the legal advice received is that this actually extends beyond just a person to an entity such as an owners corporation. So Kingsley, when it comes to occupational health and safety, workplace health and safety, what is an owners corporation required to do when it comes to fulfilling their obligations?
Yep, thanks, Gregor. So firstly, there's the OH&S component. I'll just touch on some other parts as well. You've got to obviously touched on earlier about an OC's duty to repair and maintain common property, where a lot of hazards come from lack of maintenance. You've also got common law duty of care as well. So if you know about something and you didn't do something, there's that avenue as well. So there's not just the workplace side of things. Essentially, there's no prescribed requirement as far as like what must be done, but you need to be able to identify and prove that you've taken steps and measures to ideally eliminate or reduce hazards on site. So an effective way for an owners corporation to do that would be to engage a safety consultant to undertake an inspection of the common property, identify any potential hazards, have a look at the, like with the risk matrix, the probability of an incident versus the likely outcome or the severity of the injury that would occur, provide advice on the recommended control measures. So can this be eliminated with X type of work, or is it something that needs to be reducing the risk of that hazard with other control measures? And also making sure that you're getting a report that's not biased. So by going to a third party, you've got someone there with the lens of looking at the common property from the point of view of safety, not someone who's invested in that property and doesn't like their next door neighbour because they store something on their balcony or whatever it is, and try to look at it from that point of view. So independent assessment is the way that an owners corporation can take reasonable steps to identify hazards, and then it's really up to the committee from there to take action of what are we going to do to actually eliminate these hazards.
Sure. And a number of your assessors obviously go out and inspect the common property for owners corporations. What are some of the common hazards that they identify?
So it's a very broad question, because an owners corporation could be a driveway with some townhouses, or it could be a high-rise with a lot of amenities, rooftop barbecues and pools and gyms and tennis courts, X, Y and Z. But typically, I'd say most hazards occurring in owners corporation will pertain to lack of maintenance, trips, slips, falls, etc., stair nosings that have failed or broken, concrete that's got tree roots lifting up concrete, so there's tripping hazards, etc., etc. But the criteria that should be undertaken would be assessing driveways, pathways, any areas where the traffic traverses, entries into buildings, vehicle entry and occupants, stairwells, balustrades, access and egress, emergency procedures. Also, OHS obviously ties a lot into the ESM stuff as well. So having a look at are the items being maintained? It's not a designated ESM audit, so to speak, but it is still a good safety report would still be touching on those areas. Service and amenity areas, plant rooms, waste rooms, etc., where you've got your building managers engaged to undertake works. What are the types of risks and hazards there coming across? Working at heights, obviously, is a big one. Asbestos, if you're an older property, you've got asbestos, how are you going to deal with that? And security issues. But it's important to communicate with your assessor. If you've got a facility manager on site, their information is valuable, because you might get a assessor to come through who's there for a few hours on one day. You've got a building manager that's there every day of the week, and they're going to have a bit more of the documented close calls or incidents, etc., etc. Further to that, I think it's really important not to just get a report and sit on it and say, oh, we got our report, we're done. You need to actually show that you've done something about it. If there was an incident, the questions would be asked, well, why didn't you take action? The other thing too is how do you document like your review process? So is once enough? A lot of people go, well, we had one 5 years ago. So how often are you getting these done? And that's really is a case-by-case basis. Yeah.
Great, thank you, Kingsley. So you spoke about facility managers. So certainly the domain of building compliance is beyond the remit of an owners corporation manager, and that's why there are professional companies such as yourselves, Marby, but also there are facility management companies out there who do a similar service, and they install full-time or part-time building managers into properties. Certainly in this sector, there's under the banner of facility management for the owners corporation sector, so primarily dealing with residential properties, there's two main focuses. There's the asset management focus, but also there's the occupier management focus as well. Based upon my experience, I've found that many building management companies do the occupier management pretty well, and however, when it comes to the asset management, there's a bit of a gap there. However, certainly not when it comes to Summit. I've identified Summit that whilst they can do the occupier management, there's a strong focus on making sure the asset is managed properly when it comes to building compliance obligations being met, but also understanding preventative maintenance that as well. So Hamish, and I think I called you Simmons before, it's Hamish Simons, by the way. Yep. Get that right? Yep. Please can you explain the importance of ensuring that asset management is a priority for an owners corporation?
Yeah, would love to. I think I'll just mention first, because of the gap that you've picked up, there is a distinct difference between, everyone kind of refers to building management, like caretakers are not building managers, and then there's facility managers as well. There's a large, significant difference between the skill sets, okay, within these people. So the reason to maintain and the importance of maintaining common property extends off the back of what professionals like Joseph and Kingsley here do. So the first step of that is the occupancy permit. They've referenced that is basically issued to show that the building is able to be occupied. Part of our role and the importance of maintaining common property and the buildings and the assets as a whole is to ensure that we continue that. Okay, we need to make sure that the building is maintained and the systems within it are maintained to ensure that occupation of the site is still compliant. I'm sure in severity and extreme situations, there could be situations posed on the building where occupiers would have to be displaced. If the MBS deems that the place, the asset is not occupiable, then until certain maintenance and compliance issues are resolved, and that'd be huge. That's a huge issue. There could be 10 people, it could be 1,000 people, depending on the facility. But there's many reasons why we need to maintain common property. There's values of your property that come into it as well. We need to make sure that the building not only looks, but it's still performing as designed. And that's not only all the soft surfaces as far as the cleaning, the aesthetics, the painting, the surface of the, the structure. It's also all the engineered services within it. So there's a lot of time and a huge amount of money that goes into these assets. And, to most people, it's a significant asset within, what they own. So it's imperative that we maintain it, not only for the function of it, for the value of it, but for the safety of the occupiers as well. And like I think both people have touched on, it's not just okay to, carry out the minimum inspections, we also have to maintain it. Without maintaining it, you're going to be up for significant costs unnecessarily, from premature asset failures, just to poor maintenance that can have consequences. You don't maintain hydraulic systems properly, causes water leaks. Okay, you get water leaks, you get more insurance claims. More claims means your premiums go up. So there's a huge amount of reasons we need to do it, but I think the nuts and bolts of it is that we're here to continue and maintain the site, that the surveyors are put on as far as ESMs, and that all the engineered services within it still perform how they're designed to perform.
Thank you. So we've touched on essential safety measure compliance. We've touched on keeping a safe workplace, common areas. But what are some of the other compliance obligations when it comes to building infrastructure? So whether it's pools or working at heights, that type of thing.
Yeah. Obviously, like Gregor, you have your OP, your occupancy permit, that lists key ESMs. That's nice and easy, although the frequency that they list isn't the only frequencies. Quite often, an example of the detection, it will list the most common frequency, so monthly level testing. It doesn't say that you need to do 6 monthly, annual, the 5 yearly, 10 yearlies. Sprinklers have a 5, 10, 25 yearly, and then 10 year thereafter for the 25. There's a multitude of different frequencies that we need to be aware of. Then on top of the OP, we'll start with the key infrastructure areas. So you've got the hydraulic systems within buildings, backflow prevention devices. Now there's different types of devices. That's a nice easy one because at least the Water Authority will actually notify, generally the OC company, that their backflow prevention device is due for testing. It's annually, needs to be done. I guess on top of that, your facility manager, or at least your building manager, should be aware that if you have a fit out occurring, a lot of buildings these days are mixed use, they'll have commercial retail in them. You have a medical facility come in, that actually changes the class of device you need for that building. So it's not okay just to know, okay, we need to do this every year. We need to understand, you need to have an FM company involved that understands changes and how that can affect. Within the hydraulic system, you've got your thermostatic mixing valves and tempering valves. A building that has a base building hot water plant that supplies everyone's apartments with your hot water, you will have a tempering valve to service your bathrooms. Not your kitchen, just your bathrooms. Okay, and that tempers the water down to 48, 50 degrees Celsius. Now, they should be checked annually, recommended to replace every 5 years. Same with a thermostatic mixing valve. It's the same purpose, it's to temper water. And these valves are generally found in communal bathrooms. You may have a rooftop kitchen or facility. End of trip facilities, bathrooms. If it's supplied by the building's base hot water system, you'll most likely have a TMV, a thermostatic mixing valve, or a tempering valve. So we've got to make sure that they're tested annually, replaced every 5 years. Within the electrical system, you've got thermographic imaging of all your distribution boards, your MSB boards, isolation panels, meter panels, and RCD testing. Now that sometimes your insurance companies, your underwriters will actually request this information, but we should be doing that annually. PAT testing, you test and tag on your electrical equipment. Microwaves in your kitchenettes, in a rooftop area. Gyms with your treadmills, they're all powered, they're all got plugs on them. A lamp in your foyer, all these portable appliances should be test and tagged to its need. Generally, let's call it annually to play it safe, but depending on how it's used can alter that. Working at heights, anchor points, lifelines, fall arrests, Tavadan systems, BMU systems, all the infrastructure was installed in the building to make sure that working at heights can be done. They need to be certified and inspected annually. I guess the list goes on.
It does. Cooling towers, water testing.
So Health and Wellbeing Act is actually a good one. So the Health and Wellbeing Act in 2019 was amended in 2019. So it brings in the cooling towers. Not too common these days, but there used to be a lot of grey area with swimming pools in your residential buildings, your Class 2 buildings. Correct me if I'm wrong, but there was a lot of grey area depending on how we maintain the chemicals, how often they need to be tested. Now in 2019, end of 2019, that was updated and essentially lumps all our residential buildings in with hotels, kind of like a commercial setting. So they've kind of realised that, okay, it's not just a private pool because you've got hundreds of people using it. But in doing so, meant that if you didn't have the right dosing and monitoring systems, you need to check the chemicals every 4 hours. huge cost to the owners corporation. You can do an aquatic course, pool and aquatic technician course, teaches you with the chemistry of the pools, and your FM, may be able to do that, but then that brings in issues as far as health and safety, managing chemicals. There's a whole other, issue to that. But I guess it does give them the confidence and the knowledge of what needs to be done. Now, to get around that, if the OC has the money, you can put in systems that will automatically dose the pools, will monitor it, and it can't just monitor one or two. There's a key requirement to what it's monitoring as far as the pH levels and chlorine and acid and everything like that. But even with a system that's monitoring and being able to push notifications to someone or an organisation, you still need to do a manual check of the pool, and ideally before it opens. So that was a big change, I think, in the OC world as far as, and cost-wise, it was a significant issue, I think, for a lot of buildings.
Definitely.
And probably still a lot that's not doing it.
I think the message here is that the list is very long, and that experts are required to come in and actually analyse what compliance obligations there are for any building, whether it's a large or a small property, and ensure that the compliance is being undertaken. So what governs some of those requirements? Is it the Building Code of Australia? Is it Australian standards? Is it a mixture of legislation?
I think what you have to understand is that it's a mixture of legislations, and unfortunately the interlinking between those pieces of legislation is non-existent. So a lot of them are standalone, but a lot of them are on the premises that it's been looked after by something else, right? So like the OHS and the Health and Wellbeing Act is on the presumption that everything in the building is compliant, right?
Yeah.
But the interlinking between the two is non-existent. It's like the Subdivision Act, right? In terms of if there's a change of use or whatever, or if there's a subdivision happening, it's on the premises that the Building Act will look after that part of it. But if it doesn't, then you're in that sort of no man's land or grey area where everyone's scratching their head trying to figure out, well, what do we have to comply with?
Yeah.
Okay.
Yeah.
Yeah. So, they're just two pieces of legislation.
So to extend off that to what Joseph was saying, like, so with that act changing, the Class 2 buildings, the residential high-rises, had to register the pools, as well with council. So there is a register of all these pools. Now, to be submitted as well. So there is. It just
that's not
continues.
building legislation. That's health and wellbeing.
Yes.
Yep.
It just continues along.
I just want to touch on also in terms of there's requirements for compliance for some of this building infrastructure, but there is best practice. There is recommendations by the manufacturer regarding ongoing maintenance, preventative maintenance of infrastructure. So it's important for an asset register to be created initially, and there's been recent changes to legislation, the Owners Corporations legislation that talks about that type of thing, but also making sure that there's a preventative maintenance plan schedule for the annual maintenance, not just the long term, and then also looking at tracking the asset life cycles, which comes into the long-term maintenance plan. So if you can just touch on your approach to that briefly, if you can.
The approach, well, with planned preventative maintenance, obviously our approach on that, firstly, don't take the builder's operation and maintenance manuals as the sole, as the truth of it all. As-builts, as we all like to call them, unfortunately are not as-builts. Okay, there are variations, and a lot of times the subcontractors do not update their plans, their asset schedules. So a competent facility management company should come in and do their own asset register, identify all the actually installed systems, and then build, obviously, an asset register off that. Now, I'm sure Kingsley's gone into a lot of buildings with building managers and asked for an asset register and gets absolutely nothing, just a confused look. And your building management company cannot be maintaining what they do not know either. So they must identify, they must know what it is, they must keep a register, not only for just compliance, but ongoing maintenance and management. There was PPM, was there asset register and PPM?
Asset register, PPM, plan
Yep.
preventative maintenance, and then also tracking the life cycles.
Right, yep. So plan preventative maintenance. So how we operate, you do a gap analysis. The ESMs on an OP will form part of your plan preventative maintenance. Okay, then on top of that, you've got, as you said, Gregor, the manufacturer's recommendations. So a brand new build, if you've got a brand new building, we need to make sure that we're doing and following the manufacturer's recommendations to ensure that your warranties are upheld. You don't do what they recommend, then highly likely you go to put a claim in against a pump that's failed. You can't prove it's been serviced, they're not going to replace it. So we need to make sure that we are following the manufacturer's recommendations. And then the best practice guidelines are there, and you know that we'll always make sure a pump is, say, serviced 6 monthly. It is to ensure that that asset is performing at its optimal level for as long as it can within its life cycle. So we all maintain our cars. If we didn't, they wouldn't run well. They would be rough, they wouldn't stop, they wouldn't go very well. It's the same element to any asset within a building. Okay, we need to have that PPM done, or the planned preventive maintenance, to ensure that it runs at its optimal level. Could be efficiency, could be reducing breakdowns, which obviously excessive after hours call outs. The subsequent costs with that, if its security is compromised, you've now got security guards involved. So planned preventive maintenance over the long term will actually reduce your operational costs, as well as make sure your warranties are there. And then lifecycle management kind of brings all that into it. So effective lifecycle management is ensuring that the asset is maintained appropriately, is running optimally, and then also identifying when it becomes end of life, where your maintenance and upkeep on that asset is kind of outweighing the asset value. Good example, Band-Aid repairs on a car park garage door. You're constantly throwing money at it because it's constantly breaking. You've got the subsequent cost. Now, a competent building management should be able to identify, well, hang on, we've spent $25,000, $30,000 now on this gate over 12 months. Whole new doors, $15,000 with a warranty. And we start fresh again. So that's why the life cycle management is critical as well. It's also critical, and part of what Marvi would do as well, is understanding this disposal of the asset. It's not just going, is it running well? How much are we spending on repairing it? It's also identifying that, okay, if we've got to get a piece of equipment off the roof and it's 40 stories up, it's going to be costly, okay? And sometimes they put assets in and then build the room around them, big generators for a lift perhaps. So it's imperative that we understand the life cycle and the importance of planned preventive maintenance and ensuring that asset is maintained appropriately.
Right, very good.
Yep.
Joseph, I'm going to come back to you now, talking about building notices and building orders. So at times an owner's corporation may receive a notice or an order from the local council regarding non-compliance. Are you able to talk us through that process and
Yes.
in terms of what action an owner's corporation is required to take?
Okay, look, the enforcement actions under Part 8 of the Building Act, it's not just notices and orders. There's, I think Jenny talked about before, you've got stop work orders where, people might be starting to construct something or taking advantage that comes in and says, yes, bang, stop what you're doing until we can decide whether what you're doing is legal or needs rectification work. You've got emergency orders as well, all right, which is really something whereby we utilise if there's been an incident in the building, all right. For example, there might be a fire and of course there might be a flood in the building, right. It knocks out all the ESMs, right? And people have to evacuate. Emergency order gets issued on the building saying the building is unoccupiable until we get everything back online. And you know, at the City of Melbourne, we had quite a number of these. In one case, we had a substation in the basement that was absolutely flooded, fried the substation, and trying to get a new substation in place. This is after getting the water out and switching everything off. You know, that took close to 3 months to get it back up online. Fortunately, that was an office building, but we have had occasions of fires in apartments and floods in apartments which have knocked systems out. And of course, we've had La Crosse and some of the other ones like that. That was a fairly major one. But getting back to the general item of notices and orders, so it's a two-pronged process. So you're first off with the building notice. That is really where it's the building, the MBS or their representatives come out on site and said, look, there's a problem here. It's either there's works happened that have been illegal, there's issues with the ESMs, it could be that something has failed. It also change of use. I mean, within an apartment building, I mean, I don't touch wood. I hope no one's had to deal with overcrowding in apartments where people are using them as rooming houses rather than an apartment. They're the sort of things where an emergency order or a notice will come in.
Sure.
And it says, show cause why you shouldn't do this because we believe this, this and this has happened.
I guess an example, sorry to interject, would be combustible cladding.
Yes, yes. So basically the show cause is really about saying, well, here's what we believe. We're giving you the opportunity to make representation as to whether it's true or whether there's alternative scenarios that can meet the criteria. So usually they'll specify 30 days or 60 days for a response. It's not about having the fix or the solution. It's really about responding as to how you want to achieve the solution, right? So in a lot of cases, I suppose cladding's the opportune way. You'll find that the stock standard reply that a lot of the MBSs are using nowadays is remove the cladding and make good, right? And or prove to us that it's going to meet the NCC requirements. So that the reasons they're providing those options is because in reality they're not quite sure whether the cladding is of such a nature that it can stay on or whether it needs to just come off, depending on its risk.
And your point, I guess, perspective rather, regarding how an owners corporation should deal with the receipt of a building notice or a building order. Should they be engaging a professional, a building surveyor, a building engineer, fire engineer, depending on the scenario?
Depending on the scenario, it's going to depend on who you engage, all right? In a lot of cases, if it's the cladding issue, inevitably a fire engineer will be involved. I think I received a call from an OC the other day, and the amount of ACP that it was on the building, it was quite small. I said to him, why are you fighting it? Just get rid of it, right? You know, don't bother going down that route, right? Because the cost of compliance for, as we know, is quite horrendous in trying to prove that the cladding is suitable and can stay on. And if it's the ACP with the 100% polyethylene, well, very rarely will you be able to justify it, and no fire engineer will put their name to it nowadays.
Sure.
So there's been that change in scenarios as well. So depending on the situation, you could get a consultant building surveyor in and an overview of which is the best direction, right? And if it's, and let's face it, the cost of replacing cladding is not cheap either.
No.
So it becomes a real balancing act as to which direction you go with. And you'll have quite a number of consultants having to be employed to actually prove or justify that the building is safe. There may be, and I'll touch on some of the ESMs, we tend to be dealing with where the OP has got the ESMs listed. Now, we've got to remember that not all buildings have OPs, occupancy permits, with a schedule of maintenance of essential safety measures. Some of the historic apartment buildings and other buildings, you know, they've got nothing, right?
See, that's when a maintenance determination is required, is that?
Yes, a schedule of the maintenance determination comes in. You engage a building surveyor to come in and do a maintenance determination.
Yep.
They do an assessment of the building and from first principles. Again, it's a detailed scenario. I'll go on with what Hamish was saying. There's no criteria in the regulations at the moment to require as-built drawings and documentation, right? There still isn't. The VBA are starting to look at that at the moment in terms of a building manual, and hopefully that will provide that for new buildings, but I'm not quite sure whether they'll make it retrospective, right? Because from a regulatory impact statement perspective, when you go retrospective, you have to make a fair amount of analysis to prove that it's going to be an overall cost benefit to society.
Sure.
So with getting back to the building notices and orders, so you've got your emergency orders, you also have your building order minor works where, you know, there might be just something that needs to be fixed, and the building surveyor, the municipal building surveyor will say, just fix it.
Sure.
Right? Now, all building notices and orders can be appealed.
Okay.
Right? So and that goes to not to VCAT, it goes to the Building Appeals Board. So, and that's where you can make application for various requirements. Also, with regards to the Building Appeals Board, it's not just about appeals. You'll notice in some of the cladding notices and orders that have come out there, the second option is prove to us that the cladding is suitable to stay on. However, we also want ratification, or not those words, they'll say that it needs a 160A approval via the Building Appeals Board. That 168 is a kind of independent body peer review of the solution that you're going to put forward.
Okay.
Right? And we've been through that exercise, and it's not a simple process either.
Not easy.
No, not easy, not simple.
Views, no doubt.
And you'll find that I was talking about the building approval process and with cladding, and I think we'll talk about cladding a little bit later.
Well, I think we probably need to wrap up soon.
Okay.
So feel free to touch on.
Yeah, look, with cladding, I think there's, I say that there's 3 entities, maybe 5 entities, right? Okay, and I'll explain that. The 3 entities are, there's Cladding Safety Victoria, there's the council, Municipal Building Surveyor, and then there's also the Victorian Building Authority. Now, Cladding Safety Victoria was set up, and basically, you know, everyone's heard about the 600 mil that they're going to put in place for high-risk buildings, and that came later. They then put in high-risk buildings. They said cladding buildings, right? Because they then found out how big the problem was. So they then, and it's about providing the funding for removing that cladding from the extremely high-risk buildings. So, and from their perspective, it's about whether the building is of a high-risk nature sufficiently that the cladding needs to be removed, whether the government funds it, and you have to follow their criteria with regards to how it goes about replacing that cladding. Right, so it's a funding model. Then there's Victorian Building Authority. They said they'd do audits of buildings and issue directions or facilitate the issue of directions. So you might get notice from the VBA to come out and audit your building, and they'd then handball it to the council to resolve. Of course, in most cases, councils are issuing the notices and orders because as the VBA have since discovered, they weren't really equipped to do it. In some cases, you will probably find that councils have actually, and this is a little bit of a political scenario between councils and the VBA, where councils are saying, this is too big a problem for us to handle. VBA, you become, and the VBA can become the municipal building surveyor or the equivalent of it, and they deal with the notices and orders process.
Okay.
Right? Now, they're the three entities. They're the three main entities. The other two entities that I, cheekily include are Fire Rescue Victoria indefinitely are involved in terms of the solution and whether they, through the 160A application or through a performance solution to prove that the cladding that you've got is suitable in terms of providing comments on whether they can support it or not. Then there's the Building Appeals Board. At the end of the day, there's the Building Appeals Board. Mm-hmm. So they are an entity, if you need to, you can go to in order to the peer review or get modifications to accept that what you've got is safe.
A lot of people with their fingers in the pie, that's for sure.
Yes, it's one of those sort of scenarios where very similar to any sort of emergency. Mm-hmm. We've had the floods and the fires in around the states, right? And unfortunately, a lot of entities are involved in that because basically we weren't set up to understand what we're doing. I think with the cladding, what's happened is that the realisation, because there was the focus on the fires and the floods, and then comes lacrosse, and all of a sudden state government have figured out or were alerted to, hang on, this is 400 people that have been kicked out of their homes, on one incident, right? For a period of time, and the enormity of it started to kick in.
Definitely.
So that's why a lot of this is sort of resolved.
Very good. Thank you, Joseph. I'm now only a couple of questions left. We need to wrap it up soon. Kingsley, I'm going to talk to you about maintenance plans, long-term maintenance plans for owners' corporations. Can you step us through the process of how Marby Services prepares a long-term maintenance plan, and what are some of the major capital items that need to be included in such a plan?
Yep. So obviously, a long-term maintenance plan is it's a funding process. It's a maintenance fund. The benefits are, reducing the need for large special levies, ensuring user pays, so it's a fair system. Everyone's contributing through the life of those assets, as opposed to when it breaks down, whoever's living in the building at the time's left with the brunt of it. And it allows the committee to maintain the property in a proactive manner rather than reactive. So the typical process in setting up a maintenance plan obviously is going to change significantly on a high-rise versus a smaller building, but basically you want to collate as much site-specific data as possible. So it includes undertaking a thorough site inspection of all common area for finishes, what assets are installed, so coming back to what Hamish said about the assets, the condition of those assets and the remaining, estimated life cycles on those and the replacement costs. Undertaking a review with the client, we really push that. So we really want to get the committee involved in understanding what is the budget they're preparing, what are the talking points with the OC, what are some of the historic costs or issues that are known to the OC, so that we can implement that. And furthermore, talking and liaising with the building managers, because they've got probably the most knowledge of the property, where you have a building manager, and the servicing contractor. So talking to your ESM contractor, talking to your mechanical contractor, talking to your lift contractor, etc., formulating as much site-specific data as possible, as opposed to just, you've got this and this is the estimated remaining life, etc., because it may have been replaced or had a major overhaul recently. So really want to kind of ensure that the OC understand what they're budgeting for, why, and ensuring that it is very site-specific. The Act requires, so on base level, the OC Act requires that major capital plant, so that's including things like lifts, air conditioning plant, heating and cooling plant, any items of a prescribed class, including common property structures, windows, roofs, stairwells, balustrades, windows, etc. Common property services, so the update to the regulations includes this now, such as shared services, so water, gas, electrical, etc. Becoming a bit of a prominent one of late with EV. Everyone's talking about increasing the electrical supply into the buildings or upgrades so that they can accommodate EV. And any other common property assets, so you could have gyms, pools, etc. Probably one of the most important things too is ensuring that the plan's developed as per the plan of subdivision. So making sure that what's going into this plan is common property, so you're not funding to maintain private property, and also consulting with the OC manager and the committee around some of the more prevalent in today's age is the user benefit as well.
Sure, thank you. Alrighty, a few final quick-fire questions. Joseph, to yourself, regarding upgrade works to common property, there is potentially a requirement for an owners corporation to obtain a building permit. What does an owners corporation need to do to obtain such a permit? And also planning permits, how do they come into the fray for owners corporations as well? Okay, again, separate pieces of legislation, both self-contained. In other words, there's a very small linchpin between one and the other. Planning permits can vary between councils, requirements, etc. Usually any form of external works that might impact the street or the streetscape and affect the external properties around it and or the thoroughfare. So would an example for an owners corporation be car parking, potentially removing the visitor car park? Yep. Is that a planning permit situation? Yep. But you have to ask, I'm not a planning expert, sure. And you need to ask the council. That's not a private service, by the way. It's one of those functions that have not been privatised. So the issuing authority is the council. So you need to make inquiries with council. And because it's at a local level, it can very much depend on what the response you get. You might get two different responses depending on the priorities of the different councils. All right, that's from a planning perspective. From a building point of view, virtually, if you read the regs and the Act, virtually everything needs a building permit unless it's been exempted. So Schedule 3 in the building regs provides a whole list of exemptions. And, repair work, and it's repair work where it's replacing like for like to a certain extent is exempted. But again, there's that, there's going to be people that push that threshold, sure. Right? And try and consider something as a repair when in actual fact it's actually new work. So right? The engagement of a building surveyor is required to provide that permit. Yep. There's other pieces of legislation, WorkSafe and all that stuff. For example, Kingsley was talking about asbestos as well. I don't know how many people are dealing with some of the older properties around in terms of OCs, but again, you've got to be really, really mindful because people forget, the banning of asbestos was pretty much still, asbestos was still being put in up until about the 90s. So people are forgetting that, there might be actually asbestos on some of these older apartment buildings and, and some of the renovations that might have happened. So just be mindful of that because that's
OHS sort of issue. But yes, get a building. Even your a lot of the building designers the really good building designers will get in and be able to troubleshoot as well. But inevitably, there's always some issues. The other thing to be really mindful of is if there's a change, any kind of change, even a repair or a change to an ESM, it needs a building permit. All right, so that's not an exemption. They want to make sure that any of the ESMs are working properly and appropriately for the building. The other thing I'd highlight is that be careful if you've got performance solutions on your buildings, because you then also need to make sure that what you're doing is not contradicting the original fire engineering report.
Sure.
Because again, you need a building permit and you would need to refer it back to the original fire engineer or get a new fire engineer to review the whole thing.
Sure, thank you. And one final question, Hamish. We spoke about making sure that the workplace is safe, and also we referred to the situation on the previous panel regarding the change of a light globe. And so in terms of procuring contractors, how do you go about making sure that they are doing the proper thing when they're undertaking works on common property to mitigate that risk for the Owners Corporation?
Yeah, as quick as I can.
Sure.
So, firstly, contractually, we can't discharge all the responsibilities onto the contractors. So we do have a critical part in protecting and mitigating the OC. So firstly, contractor compliance. We want to make sure that the contractors doing the work have the relevant licenses. They have the relevant insurance coverage. And depending on the work, to mitigate, if we're talking about mitigating risk to the OC, we could even go down the path of financial viability. Now, that's not going to come into a lot of work except for a major construction work, where you may want to go down that path with a bit of due diligence to protect the OC from someone folding halfway through the job or anything like that. But generally, obviously licenses, they're qualified to do what you engage them to do. They have the relevant insurances and the coverage amount necessary as well. We always ask for a minimum 20 mil. A lot of contractors out there still carry 10 mil. For public liability. But that's one part of it. And then the next part is actually the inductions. So it's no good just having someone come onto site. Could be changing light globes, it could be mowing, it could be more serious work with mechanical systems. Okay, you need to make sure that whoever you have doing your building management, they should be carrying out contractor inductions. I'm not going to say what systems we use to it and what to do and what detail, but we've had lots of input from our lawyers, and it's basically done to a point where we are mitigating the risk to the OC as much as possible, discharging as much responsibility as we can. But we want to do an induction at a company level, high level, which is basically general housekeeping, what we expect of the contractor. Then there's the site-specific induction, which should include specifics on your site. It could evacuation plans, nearest exits to where they're working, portable, fire systems near where they're working. They need to understand how the system operates in emergencies. Are evacuation tones, emergency tones? Is it just local sounders? We put in ours, for instance, where the closest hospital is. Relevant numbers could even be for animal welfare. Constantly asking them to, not signing off on, constantly asking though through that induction process, are you qualified? Can you provide your licenses and swims on request? We don't see it, we don't want to sign off because we're not the ones that are qualified to sign off on high angle works, but also having the induction done in a way that is relevant to that trade. So we're not going to ask an abseiler for an electrical license, and just like we're not going to ask a Sparky for high angle rescue plans. So it needs to be specific to the trade, what they're doing, basically to mitigate anything. If something untoward was to happen, they were to be injured, at least you're mitigating how much finger pointing can be done. So we weren't told about this, we weren't told about the exits, or we weren't told about that relevant piece of system. So it's stopping that finger pointing happening, mitigating your risk, and kind of putting as much onus onto them as possible.
Fantastic. Alrighty, it is just after 9 o'clock. There's a few questions in the Slido. We're not going to answer them this evening. We'll get Scott, my colleague, to go back to the office tomorrow and write some answers, or certainly research the answers through the professionals, the experts. But thank you for participating in that. We'll come back to you. But also feel free to stay back for those in the room here this evening to ask the questions. Thank you very much to our panellists this evening for your insights. Kingsley, Hamish, Joseph, thank you very much. Our earlier panel was Kate, Madre and Jenny. So let's hear it for our panellists. Thank you. And we wouldn't be here tonight without our sponsors, the support from them. So I want to say a huge shout out to our premium sponsor, Linkfire. Alistair, Chris, thank you very much for coming along. Also our gold sponsors, Lennox Strata Finance and Marby Services. And finally, thank you everybody for joining us tonight. Hopefully you learned something, and certainly there's an opportunity to follow up if you have any other queries about what we discussed tonight. So I'm going to draw a line right now and close the evening, but we'll see you again next year. Thank you very much. Cheers.